Welcome to the deep dive. Today, we're trying something a bit different, kind of a shortcut.
Yeah, not cutting corners, though, more like using a very specific lens.
Exactly. Our source material is excerpts from CS4 CFI 2504 exam practice questions with explanations.
It's actually a really good way to focus on what SAP considers, fundamentally important in S/4HANA Cloud Finance.
So our topic is digging into those core financial ideas, but seeing them through how these exam questions frame them.
Right, because the questions, they often test the practical application, the nuances.
And what we want to do, our mission here, is unpack these specific questions and, crucially, their explanations. We want to pull out the important nuggets, the why behind the answers.
Basically give you insights into how S/4HANA Cloud Finance is built, beyond just memorizing terms. It's about understanding the logic, the design choices.
And just real quick, the source gives a hint about the exam itself. 80 questions, 3 hours, 65% to pass, English only.
And a mix of single and multiple choice questions, which tells you they're testing very specific points of knowledge.
Okay, right. Let's dive in then. Starting with something really foundational. Ledgers. The source mentions two main types. Why is that distinction such a big deal?
Well, it really gets to the heart of how S/4HANA Cloud handles different reporting requirements. First up, you've got the leading ledger.
Okay. The main one.
Yeah, think of it as your primary set of books, your single source of truth, usually for your main accounting standard like IFRS or GAAP. All the standard day-to-day financial postings go here.
Got it. That's for the official consolidated statements you'd show shareholders.
Exactly. But then there's the second type,
Which is?
the extension ledger.
Yeah.
And this is where things get, flexible. It's designed for additional reporting needs.
Like what kind of needs?
Maybe local accounting rules,
Yeah.
specific management reports, maybe even simulations. But the key thing, as the source points out, is how it works.
Okay, how does it work then?
It doesn't just copy everything from the leading ledger. That would be inefficient. Right?
Yeah, tons of duplicate data.
Right. So instead, it only posts delta entries. Just the differences, the adjustments needed for that specific reporting purpose.
Ah, I see. So it sort of sits on top of the leading ledger data.
Precisely. When you run a report using an extension ledger, the system cleverly combines the base data from the leading ledger with those specific delta postings from the extension ledger.
Okay, that is much smarter. No redundancy. Is that efficiency the main point?
Efficiency, yes, but also flexibility. It's built on that universal journal idea where all the data lives together anyway, so you get parallel accounting, local reporting, all without creating separate data silos. Understanding that delta concept is pretty fundamental.
That makes sense. It links the definition straight back to the system's architecture. Cool. Okay, moving on. Controlling data entry. The source seems to stress this. Why?
Because, garbage in, garbage out, right? Data quality is everything. This brings us to the field status group, or FSG.
Field status group. Okay.
Yeah. And it's not just some random setting. It's a core control mechanism.
Hello.
It's defined in the GL account master data. That's the key link the source highlights.
So it depends on which specific account you're posting to.
Exactly. And what it does is control the fields on the screen when you're entering a document. Which ones must you fill in,
Right.
which are just optional, and which ones are hidden completely
Oh,
because they're irrelevant for that account.
Ah, okay. So if I'm posting to, say, an expense account, the FSG might force me to enter a cost center.
Perfect example.
Yeah.
But if you're posting to, a bank account, maybe the cost center field is suppressed entirely. It makes sure you capture the right details for the right transactions.
It's like the system enforcing business rules right at the source. I get why that's important. Mess that up and your data could be incomplete or inconsistent.
Totally. It's a basic but critical configuration. It affects users directly, but more importantly, it ensures data consistency, which you absolutely need for reliable reporting later.
Makes perfect sense. Keep it clean from the start.
Yeah.
Okay, next up. Manual journal entries. There's a specific app mentioned.
Yep, the Managed Journal Entries app. This is one of the main Fiori apps for GL accountants in S/4HANA Cloud. Pretty self-explanatory name, really.
But I'm manually creating entries.
Its main job is letting you manually create, edit, and post those general journal entries. For adjustments, corrections, accruals, that sort of thing.
Is that all it does, just the manual posting part?
Well, that's its core creation function. But the source also mentions you use it to view journal entries too. And because S/4HANA is real-time, what you see is the immediate impact.
Ah, okay. View and post.
Right. But the source also points out what it doesn't do, which is interesting. It says this specific app isn't for setting up recurring entries or scheduling automatic payments.
So those functions are handled elsewhere.
Exactly. Different apps for different jobs.
Yeah.
Shows that modular Fiori approach. Knowing the boundaries of an app is just as key.
Good point.
Okay.
Now, for something maybe less frequent but critical, reversals. What happens when you need to undo a posting?
Reversals. Yeah, crucial to get this right for audit trails. The source is clear. You don't delete the original document. Ever.
Okay, so the mistake stays on the record.
Absolutely.
Right.
For traceability. Instead, you post a reversal document. The system creates a brand new document.
A new document, and what does it do?
It posts the exact opposite entries of the original document. So if the original debited account A and credited account B for $100.
The reversal debits B and credits A for $100.
Precisely. The net effect on the account balances is zero. It cancels out the financial impact, but both the original document and the reversal document remain in the system, linked together.
That maintains the integrity, the history, makes complete sense for auditors. You see what went wrong and how it was fixed.
Exactly. It's fundamental.
Yeah.
New document, opposite posting, original untouched.
Got it. Okay, let's talk legal reporting requirements. Always a headache for global companies. The source mentions two valid ways. S4 and Cloud helps here.
Right. The first one it points to is using country-specific scope items.
Scope items, like pre-packaged content.
Yeah, basically. These are pre-configured processes and settings that SAP provides, specifically tailored for the legal and tax rules in certain countries, like templates for compliance.
So using these helps you meet local standards more easily.
That's the idea. It can be a huge accelerator for implementation and ensures you're covering the necessary local requirements for things like tax reporting or statutory financial statements.
Okay, that sounds useful. What's the second method?
The second valid way mentioned is assigning country-specific charts of accounts.
So different countries can use different account structures.
They can. You can set up a chart of accounts that perfectly matches the legal or tax reporting structure required in, say, Germany, and assign it to your German company code, even if your main global chart of accounts is different.
But how does that work with consolidation?
Well, you typically also have an operational chart of accounts for consistency, and you might map the local accounts to the group accounts for consolidated reporting. It allows you to meet both needs, local compliance and global consistency.
So it's about balancing those two things.
Exactly. And the source implies that just creating custom transactions or trying to manage legal entities manually aren't the structured ways the system intends for you to handle these reporting requirements.
Right. Focus on the scope items or the specific charts of accounts. Okay, let's pivot slightly to basic configuration. The fiscal year. Why is a fiscal year variance so critical?
Oh, it's absolutely fundamental. It defines your entire financial calendar. How many posting periods are in your year? Does your year run January to December or maybe July to June?
So it sets the timing structure.
Completely. It defines the periods, including any special periods for year-end adjustments. And crucially, it controls when you can post, because the variant is used to open and close posting periods. You can only post a transaction into a period that's currently marked as open in the system for that company code's assigned fiscal year variant. It's a major control point.
Okay, so it dictates the structure and controls the posting windows. Makes sense. And where do you set these core things for a company code?
That happens in the Manage Company Codes app. Think of it as the central spot for defining the identity and basic operating parameters of each legal entity you set up in S4 Cloud.
And the source called out some specific parameters set there.
Yes, the really essential ones. Assigning that fiscal year variant we just talked about, defining the company code's local currency, and specifying its country. These are non-negotiable baseline settings.
The absolute basics for that company code to function financially.
Got it. Okay, let's switch gears now to procurement. Centralization comes up in the source. What are the benefits highlighted there?
The source points to some significant advantages of centralized procurement in S4 Cloud. One big one is enabling shared services. You mean like having one central buying team handle purchases for multiple company codes?
Exactly that. Instead of each entity having its own procurement folks, you consolidate. That reduces redundant effort, saves costs, improves efficiency. Standard stuff for shared services, really.
Makes sense. What else?
The other key benefit mentioned is supporting unified vendor master data maintenance.
So one list of suppliers for everyone.
Pretty much. You maintain your vendor information centrally. This means better consistency, fewer errors, everyone using the same vendor record. It simplifies reporting on spending and makes processes smoother across all the different units using that central procurement function.
Consistency and efficiency again. Seems to be a recurring theme.
It is. leveraging that single source of truth idea.
Okay, last point then. Let's tie back to organizational structure and the chart of accounts. What's the specific link the source emphasizes?
It clearly states that the chart of accounts is assigned at the company code level.
To the company code, not higher up.
The direct assignment is to the company code. Remember, the company code represents the legal entity. So it's the company code that dictates which structure of accounts, which chart of accounts will be used for all its transaction recording and financial reporting.
But couldn't multiple company codes use the same chart of accounts?
Oh, absolutely.
Right.
And often they do, especially using a common operational chart of accounts for global consistency. But the assignment, the configuration setting that links a specific chart of accounts to an organizational unit, happens at the company code.
And this allows for that flexibility we mentioned earlier, right? Assigning a country-specific one if needed.
Exactly. It all connects back. The company code is the anchor point for defining the legal entity's accounting structure.
It really does all start to tie together.
Yep. It's a pretty integrated financial architecture.
Maybe something for you to chew on. We saw this pattern. Global consistency features like the leading ledger or unified vendor data, running alongside features for local needs like extension ledgers or country-specific configurations tied to the company code.
Right, that balance between standard and local.
So the provocative thought is, how do companies actually manage that tension in the real world? Balancing the drive for global standards and efficiency with the non-negotiable need for local flexibility and legal compliance when they implement and run S/4HANA Cloud day to day.
That's the million-dollar question in any global ERP implementation, isn't it? Getting that balance right. It's a constant calibration act.
It really is. Well, thank you for joining us on this deep dive today.